Hello friends, welcome to my channel and thanks for watching this video. As we have ended one more volatile week on Wall Street, and the last day of the week was quite dicey, I would say, where the overall stock market has fallen and Dow Jones fallen by 1%, Nasdaq fallen by 2.5%. So things turns volatile again. So what has happened in the last 1 week and what will happen in the next upcoming week is going to be discussed in this session of USA Weekly Market Report series. So without any further ado, let's start analyzing the trend and let's start discussing the things that will probably happen going forward. So let's start this video, but before that, if you haven't yet subscribed my channel, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. Now if you're looking at the headlines, we can clearly see that inflation is now hitting and pinching the business, and Elon Musk sent all Tesla employees about 10% headcount reduction. So this is what we have here as the first sign of inflation is pinching to the corporate business. And I don't know how to consider this headline. I mean, lot of luck on its trip to the moon. It's like, I mean, you cannot pinch or you cannot it's like uh, taunting somebody or making a fun of them, that who told you to do these kind of big things or big expansion in the business. You must cut your cost. So that's what it looks like. So I don't want to make comment on it. Probably they will face the situation, and eventually making comments on businesses is one thing, but at the end of the day, US market is highly, and I would say 80 to 90% relies on stock market. And if US stock market falters, the government will definitely come under pressure beyond a certain point. So this is not a point of joke. You cannot make fun out of it. And when things turns ugly, you need to do whatever you can, whether you want it, whether you like it or not. And this is, I completely agree with this one. Fed's Mester says inflation hasn't peaked and multiple half-point rate hikes are needed. I don't know about the rate hikes and all. That's completely the central bank's decision. So we are just an observer of the data. But about this inflation thing, yes, I certainly agree with this highlighted section. The reason is it's not going to be controlled by monetary policies, because it's the policy of the state which is responsible for half of the inflation across the globe. And until and unless things settle down geopolitically, you cannot fight inflation single-handedly. So if Fed makes interest rate moves higher simultaneously in the next couple of months, let's say if they go on increasing 50 basis point or 75 basis point rate hikes in the next couple of months, what we will end up with is a economy, or is an economy which will definitely be in recession. And we are half the way mark done, because the GDP is already negative for 1 quarter and one more quarter, and technically the US economy will be in recession. The things are not looking as easy as it sounds, right? But stock market is completely a different ball game. What we are discussing about is economy, not the stock market. Okay, so they are not going parallelly. They will always move ahead of the actual economy. So the stock market will always move ahead. Let us see if there is anything. Okay, and here we are. There is something which we rather, it's not about whether we should discuss it or not, but this kind of headlines like 100 days, it is not at all, this does not looks good. It's like two countries are in paralysis for 100 days and somebody else is laughing around the corner. So I don't know how to react with this kind of news. Hopefully things will settle down, and that's where you will see inflation comes down. That's what I can say. Apart from that, crypto firm says thousands of digital currencies will collapse. Compare market to early .com days. So if there is anything, we will see, because one thing is for sure: when the overall market, or when the theoretical market, when we are talking about, when I am talking about theoretical market, so this is not a term which you can find on the books, but when I'm talking about theoretical market, I'm talking about the old economy kinds of things like stock, bonds and real estate plus gold. Okay, when they have issues, all the new financial instruments which are there in the marketplace, people pull money out of it. People will definitely pull money out of it. Whenever you are building a house, the most strongest part will be the base. If the base is not strong, your house is not going to stand tall, and you can't live inside that. So that's the thing you need to understand over here. So whether that will happen or not, I don't know, but yeah, things looks risky. That's what this headline is saying, so we will see. apart from that I don't think that we have any more headline news that we should look upon. So let's quickly go to the market and let us see what has happened last Friday. We have seen all the major indices move slower. Gold is also moving lower, rather gold is consolidating. It is neither moving higher nor lower, so it's been consolidating in between 1800 and 1900. That's what you can see. Oil is quite firm, as I've told you last week. You can go and check it out. I've been saying this for the last couple of weeks that oil is not going anywhere. It doesn't matter whomsoever is saying what, because there is genuine supply issue right now. There is demand, but because of unnecessary things, because of when level-headed guys, I don't know who is level-headed or not, but hot-headed guys are obviously there. And if nobody wants to sit and talk, nobody wants peace, if somebody wants trouble, and if you give a sword in the hands of the monkey, that's what you can see. Everybody will suffer, and it doesn't matter whether you are living in Uganda or whether you are living in in the remotest area of the world. Oil or commodity hike will definitely pinch your pocket. It will directly hit the pocket of somebody who is working hard day in day out for the basic needs. Okay, so if he or she is suffering, then it's not their fault. It's the fault of those guys, those who do not understand things and make other people's life hell. So this is leave this aside and let's talk about the market. Otherwise that will be a different issue. So here we are. The important thing to look out here is the US 10-year bond yield started rising again. Okay, last time it was at a near 2.7, 2.8. Now it is at 2.94. So market is completely uncertain at this point of time. Market is not taking anybody's comment, that you can clearly see, and it is showing uncertainty. It is showing that market is not comfortable with this kind of development or whatever is happening. So things will turn volatile quickly, and the volatility will persist even going forward. Apart from that, you can see there are positive moves across the bond yields and across the maturities, we have seen how the bond yield started moving. Dollar index suddenly shows some sort of up move, but we will see, because dollar is always a surprise thing, and I have been saying this for the last 1.5 year that the chart is not showing the strength. If you're looking at the indicators, I'm not saying about the price, but the indicators are not showing strength. Eventually we will see what happens going forward beyond a certain point. So let's start analyzing the charts again. So talking about the Dow Jones, now one thing you need to understand about all the major indices, that we are in a correction, and a sharp bounce back will happen again and again, even if we are in a big correction. So you need not to worry about that, because the correction looks like is here to stay. It is not yet over. That's what it looks like, and we have to see. Here we are. Okay, so this is something which I am working on as of now for Dow Jones. So if you are looking at the price chart of Dow Jones, you will see something like this. So the immediate support we have here for Dow Jones will be 32,756. On the upside, you have your range in between 34,662 and 35,000. But if it falls below 32,750, rather let me adjust this one. Yeah. So if it falls below 32,750, 730 or 750, you will quickly move towards 30,000. So be very much skeptical about this move, and in any case Dow Jones must sustain above 32,750. As far as the high volatile index is concerned, there is only one, and that is Nasdaq. Nasdaq is not showing any happiness, and if you are looking at the overall chart, or this is the weekly chart for Nasdaq, I've been saying again and again that I'm not getting that vibe, or the support level, as far as the big support levels are concerned, it is way too high. It is way too high, and Nasdaq is nowhere near as far as the big support levels are concerned. So this is the trend we have for Nasdaq, or how the weekly chart of Nasdaq looks like. And if you are looking at this particular chart, you cannot see that it is trading very near to support. So the big support that I am looking at right now is in between 9,000 and 9,200, and if this is the low which is final, okay, if the recent low, if Nasdaq is not going to move below 11,000, or the recent low that it has made, then it has to prove itself. We need to see whether it will sustain above 11,000 or not, because with this single move it looks like the short term short covering has already been over. But we have to see what's the move that Nasdaq is intending to show us going forward, but with a stop loss of 11,000. Otherwise, a move of 2,500 points will further open up as far as the price chart of Nasdaq is concerned. Apart from that, dollar index, let me show you the glimpse of dollar index, or the long term. If you are looking at this highlighted section, okay, just focus on this highlighted section, and more than that, if you are just focus on the indicators, right? Let me show it to you. Just focus on the indicators. Here we are. So in the past, we have made a high in the year 2001, then slowly and gradually there was a fall. Sorry. And then again from the lows of 2008 it went up higher, and slowly and gradually prices are sustaining. It is not moving lower, but it is consolidating. But if you are focusing on the indicators, I'm talking about the MACD. Okay, so the levels which we are looking at, the highs, if you are looking at the highs of MACD, they are very similar. As you can see here, this was the high of 2001 and the high of 2015. And if you are looking at the price point, 121 in 2001 and in 2015 104. So it looks like that the momentum is slowing down, but the price is not, which is a negative divergence, and that clearly indicates that going forward the dollar index chart is not yet supporting or not at all supporting the move or the trend. More than that, if you are focusing on the RSI, it is showing overbought. So this overbought and oversold I don't want to talk about, but yes, if you are looking at, or if I'm only looking at the MACD over a period of time and compare the price and the momentum, where the price, as you can see, is consolidating, but it is not falling down. Okay, that's what we can see. And one more thing to let you understand, whenever a fall happens, let me show you the falls from the top 52%, and then from the top, here we are 41%, and the period of rises that we have here, if I am counting from 1973, you will see from 1973 to 1985, actually I shouldn't count this one, from 1978 to 1984-85, which means 7 years. Then again an upside of nearly 1992 to 2001. Okay, so 1992 2001, it's going to be 9 years, I suppose. Yeah, so 7 years, 9 years, and now what, 11 years. Here we are. So from 2008 till 2022, 14 years. So the dollar upside has already been extended. Okay, so I'm just throwing you all the thoughts that one should look at as far as the dollar index is concerned. And this is about the downside. Last time 52%, then 41%, let's say 51, then 41, and next time if it is a 31% downside also, okay, if it is a 31% downside, then we are looking at a level of 71 as far as the lower end of the range is concerned. So yes, things are looking quite better, and even if the dollar index is showing strength, but there are certain data which are not at all supporting the current price of dollar. So having said that, the near term volatility is indeed showing a great amount of rise. The market will remain uncertain, but if you are looking at the overall trend, most specifically the dollar, because the dollar is completely in sync with the equity indices, you can correlate it with any index. More specifically, if you want to correlate it with S&P index, that would be fine because it will be a combination of both Nasdaq and Dow Jones and other companies as well. So that would be good. So there is a point to point correlation, and that's where you can see how things have moved or how things will probably move. So for the next 1 week, I have my reservations as far as the markets are concerned. We have to see whether it will sustain or hold on to its recent lows that it has made. If it does not, and if things keeps on changing rapidly, we will not have a respite, which means we will see further correction on the downside. So the next week is going to be very tricky one. We have our policy decisions which is left for this month. Then we have data, which is more number of data which is yet to be seen. Whether the inflation has already peaked or not, that's something we need to discuss. So this is the end of the video. Thanks for watching.